Sarah, a tutor here at Accountancy Learning, and in this video I'll take you through the AAT Level 3 Management Accounting Sample Paper 2 Task 3. This task is all about short-term decision making. So let's look at our first question. We need to identify whether the following statements about contribution are true or false. So we're looking at contribution. The first one, contribution equals fixed costs less variable costs. So this is false because contribution is our revenue less our variable costs. So the statement would be false. Contribution can be calculated per unit and as a total figure. So yes, this is true. You can do it on per unit or total. Match the following definitions with the type of cost behaviour. Total cost increases in an equal proportion as the volume of output increases. So we're looking at total cost increases in an equal proportion as the volume of output increases. So we've got our options here to the right hand side: fixed cost, semi-variable cost, step cost or variable cost. So as the output increases and our total costs increase, this is a variable cost. So the total cost increase, and importantly, it's in an equal proportion. So that's going to be your variable cost. Total cost has an element of both fixed and variable cost. So if we've got an element of fixed and variable, it's known as a semi-variable cost. Next, we're given some information about Moseley Heights. So Moseley Heights is a small hotel with 90 rooms, and we're given the costs of running the hotel. So food, consumables and laundry are all variable costs. Labour is semi-variable, and the cost of managers is fixed, and all other staff are a variable cost to the business. Budgeted total labour cost for 90 rooms per month is 54,240, and for 70 rooms is 44,520. And it also has building and finance costs, which are fixed as well. Now we're given a forecast profit for 70 rooms in the table below, and each room, we're told, is charged at the same rate. Remember, in the exam you can click in the references on the right hand side to bring up this information so that you can split your screen whilst you're answering the question. So now we need to complete the table to show the forecast profit for 60 rooms, calculating the variable and fixed elements of semi-variable costs for both 70 and 60 rooms, and then calculate the forecast profit per room. We need to enter our answers to the nearest whole pound. So semi-variable cost then. So we know that the total labour, because we've got our labour which is semi-variable, so up here we've got our semi-variable because we've got the management which is fixed and all other staff as variable. So we're going to have to use the high-low method. So for the high-low method, we find the difference between the cost and the difference between the quantity and divide it, and then we'll have our variable cost per room. So first of all, we're going to do our highest cost, which is for the 90 rooms, 54,240. And we're going to take off the 70 rooms cost, so 44,520. So highest cost and lowest cost. we're going to divide that by the highest number of rooms minus the lowest number of rooms. And that gives us £486. So this is the variable element. So to now work out the fixed, we're going to use the 70 rooms because we need that as part of our answer. So we do 70 multiplied by 486, which gives us 34,020. Then we're going to take the total cost for 70 rooms to find the difference between that and the variable cost that we've just worked out, which then gives us 10,500, which is the fixed element. So now we can straight away put in for our semi-variable costs, our variable and fixed element for 70 rooms. So 34,020 is our variable element and 10,500 is our fixed element. Then we can work out the profit per room. So remember, we've got to do the profit per room as well. So for 70 rooms, we can then take our forecasted profit and divide it by the number of rooms. Next, we're going to work out what 60 rooms comes out at. So to work out our revenue, we're going to work out what it is per room. So 308,000 divided by 70 rooms, and then multiply it by 60 rooms to give us the revenue for the total of the 60 rooms. 264,000. We're going to do the same with the variable costs. So 45,500 divided by 70 times 60, which is 39,000. Now with our semi-variable costs, we already know the fixed element because we've just worked that out with our high-low method. So our variable would be 486 times the 60 rooms, which is 29,160. So now fixed costs, these are going to stay the same because these are fixed, they can't move. And then when you take your variable costs, your semi-variable costs and your fixed costs away from your revenue, you get a profit figure of 5,340. And then to get the forecast profit per room, we're going to then divide that by 60 to get 89. The owners of Moseley Heights are considering renting some rooms to local business on a commercial basis. The following additional information is available, and we're given the selling price per room per day, variable cost per room per day, and fixed cost per room per month. We're asked to calculate how many times each room must be let each month in order to break even. So we're looking for the break-even point. So the break-even point is the fixed costs divided by contribution. Our contribution is our revenue less our variable costs. So our contribution is 150 minus 25, which gives us 125 contribution. So there's our revenue, there's our variable cost. So we've got 125 contribution. So now our break even point is going to be our fixed cost. So we've got 2,000. So 2,000 divided by our contribution of 125, which gives us 16 times per month. Rooms could be rented for 50% more per day if they were converted at additional fixed cost of £1,000 per month per room. Now we need to complete the following table and enter answers to the nearest whole pound. So we need to work out what our revised contribution per room per day is and revised fixed cost per room per day. So our original amount was 2,000 fixed and £150 revenue. So we had 150 revenue and fixed costs was 2,000. We also had, we'll need our variable cost for our contribution was £25. So we could now make 50% more revenue per day if we do the conversion. So our new revenue is 150 times 1.5, so 50% more. So our new revenue is 225. So therefore our revised contribution is 225 minus the 25 to give us 200. And then our fixed cost, we had 2,000 and we've got an additional fixed cost of 1,000 per month. So that's 3,000. Then we're asked to calculate how many times each room must be let each month in order to break even under the revised plan. So remember our break even point is our fixed costs divided by our contribution. So now we've got new fixed costs and new contribution. So 3,000 divided by 200 gives us 15 times per month. Next, we need to use profit volume analysis to calculate the profit volume ratio for the original and revised plans. Enter your answers to the nearest whole percentage. So for our profit volume ratio then, we're going to want to divide our contribution by our revenue and to get to a percentage times by 100. So for the original plan then, it was 125, which was our contribution, so that has come from our calculation in the first part of the question. Divide that by 150, which is the revenue per day, and multiply that by 100, and you get 8.33 recurring. And we're doing it to the nearest whole percentage, so the nearest percentage is 83%. Under the revised plan, our contribution is 200 And then we worked out up here what our new revenue was, 225. Multiply that by 100 to get 88.88, and to the nearest whole percentage is 89. So then the final part is identify which option is the most financially beneficial to Moseley Heights. So that's going to be, we've got a higher profit volume ratio for the revised plan. And now we're at the end of task 3.